talking with you, and I have Avino Silver. Before I get started, for full disclosure, I own shares in Avino Silver, and Avino Silver is on the Morgan Report recommended list. David Wolfen, President, CEO. Why don't you give, there's always new viewers to our channel, so why don't you just give us an overview of Avino Silver?
Avino's been a public company since 1969. It was founded by my father. He built the mill in 1974. It operated successfully for 27 years. It closed in 2001 due to low metal prices. I became CEO in 2003, and we bought our partners out in 2006. We did a bunch of exploration and decided to recommission the plant, and that happened in late 2010. And in Q4 2012, we declared commercial production.
Excellent, a nice summary. Jasmine, I'm going to go to you. You're the technical guy for the company. In production, things are looking good. Can you give us kind of a backtrack over the last 6 months or so, and then maybe go forward for the next year or so on what you see in the production rate, ability to expand, and that type of thing?
Okay, more or less what we've been doing in the last 6 months is basically we've been ramping down from the second, third, fourth, fifth, and now we're working towards the sixth level. So going ahead, basically what we have been doing the last 3 or 4 months is we're on level 4, and basically we've been drifting along the vein east and west on both sides, and basically on the west side it's basically heading towards the old workings at one time where some of the richer grades we've obtained. Going to the east, basically we've opened up 3 new stopes. This is on the 4th level, and going to the 5th level, we're expecting somewhat similar, that we should be getting pretty close to maybe 3 or 4, maybe 5 working stopes on the 5th level. We're heading towards the 6th level right now, and basically we've encountered some additional water, which was sort of unexpected, but somehow we've been able to overcome the problem, and we've basically ordered some larger pumps, and we'll be dewatering the excess water, and that should sort of alleviate some of our advanced problems with the ramp going to the 6th level. On the processing side of things, whatever we've brought out in the development muck from these working stopes, they basically have been stored on the stockpile. And to get the higher grade material, basically what we have been doing is getting the completed stopes material and basically trucking it to the mill for processing. This is where the higher grade material comes from, right from the stopes themselves. Currently the mill is handling roughly 250 tons per day. This is the wet tonnage. On a dry basis, it's more like 230 tons a day. We're running at this capacity with very good plant availability. Typically they've been running in excess of 95% plant availability, which is very, very good. Production wise, the grades basically have been holding up. They're better than what we had encountered in the bulk sample grade of 260 gram silver and 1 gram gold. Typically our grades have been running about 280, 300 grams per ton silver and about 1.5 grams per ton gold. Recovery wise, we're getting better than what we got from the bulk sample. Typically the silver is running about 80 to 83% recovery. The gold is about 70%. When we compare these recoveries with what we got from the bulk sample recovery for silver was about 73%. So there's a 10% improvement in silver. The gold was about 50 to 55%, and currently it's running about 70%. All the concentrates that we've produced, basically they've been marketing to a trading firm, and we've been able to sell whatever we've been produced on a monthly basis. So going ahead, what we see is more of the same for the next year or so. In addition to the San Gonzalo production, we've also been able to start up a second circuit, and this is a circuit for processing the historic stockpile material. And basically we're doing it at about the same rate, around about 230 tons per day. Recovery from the stockpile material typically has been running about 50 to 60% silver recovery. The gold is more or less the same. This is because of the fact that the material has been stockpiled for so many years, and it's from the oxidized zone of the old Avino mine. We started that in April, and we've been processing it for the past month and a half, and whatever concentrates that we've produced, we've been able to market that, and we'll be looking at shipping that concentrate later this month, early next month.
Great, thank you for that update.
No problem.
Malcolm, you're the financial guy, you're the CFO, so what does all this great mining mean to the bottom line?
Well, as David mentioned, we transitioned to commercial production in Q4 of 2012, which now means we can start reflecting revenues and related costs of mining, which gives the public a better idea of what we're actually doing there. So far, we've received, or we are seeing very good returns and very good cash flow from our operations. I think we certainly have some room to improve, but as we continue to ramp down, as Jasmine was saying, we should see more efficiencies and a lot more progress to come.
So let's talk a little bit about the two different milling situations. The one is with the level 4 that you're expanding and eventually getting to level 6 and the grades in that. And then you've got this recovery that you're doing at about 60, 70% with the old material. And it's economic, right? And at what level is it cut off? In other words, if we go down any further in silver prices, is there a cutoff where this older material that you're getting money from now becomes uneconomic?
To give you an exact dollar would be difficult, but it would certainly be a lot lower than where we are right now.
Yeah, so we'd have to go a long ways down, in other words, for it to not be.
Well, the old
economic.
stockpiles, there's no real mining costs.
Yeah,
It's
there's
already
no-
been mined,
Correct.
so it's just handling and processing.
Right, yeah, my point, I mean,
Yeah.
that, you know, sitting there is kind of a gift in a way. It's already there, it's sitting there, it's not, takes too much to process it, but obviously at zero, you're not gonna make money, but I'm trying to be a bit funny here, but it's sort of a gift to the company, right? It adds to the bottom line, correct?
Right, and the middle circuit, or circuit number 2, will be available down the road as we get down into San Gonzalo mine deeper and open up more areas. We can then feed a larger operation. And same at Avino. Avino, we're dewatering right now, and we're rehabbing the mill, and that will be another 1,000 tons per day that we're adding to the mill output for next year. So the ultimate goal is to get to 1,500 tons per day next year, probably by the middle of the next year.
Okay, and you kind of anticipated my next question, which I'll go back to Malcolm and ask, and is there a sweet spot on efficiency? In other words, at 1,500 tons per day, is that, you think, the best return rate for the investor? In other words, if you expand it double from there, the CapEx is too much and the payback is too long. Has there been a study like that done on the company?
We haven't done that study yet, but certainly as we increase our capacity to closer to 1,500 tons per day, we'll certainly realize some of the efficiencies.
Okay, well, let's look at it in a different way, and that is bottom line to shareholders, and I am a shareholder, as I've said. So now as we go from the current rate to that rate, what do you anticipate looking forward as far as you know, profitability per share, or profitability to the bottom line of the company?
I couldn't comment on it at this point.
If you looked at the Avino mine on its own, when it closed in 2001, it was running at 1,000 tons per day, and it was producing close to 1.8 million silver equivalent ounces. So that doesn't include circuit number 2 and circuit number 1 from San Gonzalo. So add all that together, and we're looking at a multi-million ounce a year producer.
Very good. Well, I think we've covered the technicals. Thank you, Jasmine, for that. We've looked at the financials. We've looked at the overall picture. Is there anything that I haven't touched on that you guys would like to comment upon about Avino, maybe going forward, or something I missed? David, talk to you first.
Well, I'd like to hear your opinion on the price of silver. Then we can figure out how much money we're going to make.
Good question. I'll look it in the camera. I do not know. That's the honest answer. I don't think we're going to see under 20. I think that it's possible. Silver, anything that silver does doesn't surprise me in the short term. Longer term, we just did a study in the Morgan Report last month in the May issue, and we looked at major silver producers to mid-tiers. We're talking about the First Majestics, those type of companies. Their true costs, or all-in costs, are about $20 an ounce. So anytime you can buy a commodity at under the true price and have some patience, you're going to make out. So I don't care if it's wheat, I don't care if it's silver, whatever it is. So that's the bottom line. Now we also talked to a few CEOs such as David. David wasn't involved in this conversation. What they felt was their true all-in costs, and a couple of them indicated that we were low, that they felt that the true all-in costs were around $24 an ounce. These are primary silver producers. We're not talking to BHP or RTZ that really don't care about the price of silver because they are copper miners or zinc miners or lead miners. I'm talking about the primary silver mine that the bulk of their economics come from the element silver. So it's something to bear in mind, and because of that fact, I have some assurance of what I'm saying, and that is I do not see silver staying under the $20 an ounce level very long, even if it gets there. So there's my answer.
Great. Thank you.
Jasmine, let me come back to you. So we got a nice feel for the technicals right now, maybe going back and what you've been doing. Let's look forward. What are we looking at for the quarterly report and onward for the company?
Looking ahead, basically what we see is our main objective right now is to get the Avino mine reopened and to get the 1,000 ton per circuit back online. There are some challenges that we're facing with currently, but these are challenges that can be overcome without much difficulty. That's getting the Avino mine reopened. Then once we've completed that, then there's the tailings project that we basically would like to revisit. This is the Tetra Tech report. They had given us an update that was dated July 2012, and based on those recommendations, we'll be carrying that out, and hopefully we could get the tailings operation online sometime in 2016. And going ahead, basically, would be putting all our geological information into a 3D database, and from that information, we should be able to look at more targets that we should be exploring. That's more or less on the upside from our perspective, sort of our long-term outlook.
So let me just summarize it by saying growth prospects conservatively look pretty good at this point, correct?
That is correct, yes.
Yeah, there was virtually no exploration done at any depth on the property. Our previous partners were a private family, so they just mined with 1 or 2 years of mine life ahead of the mill. So what we've done is we've done modernized our database. We're updating it. Tetra Tech's helping us with that, and we're bringing everything current. We've got 4 geologists on staff, so we're going to interpret the data. We own our own drill. We have a fully functioning assay lab, and as the cash flows are available, we're then going to go after these targets. And Avino is on a volcanic caldera. Right to the west of us is La Preciosa, and Coeur d'Alene just bought out Orco for $350 million. It's all part of the same geological system, so there's a lot of potential at depth on our property.
Malcolm, we'll come back to you. So you're going to be busy making all these new contracts and getting all this into, I guess, the correct financial form, I'll call it.
Correct. As I just mentioned, we've been entering into longer-term sales arrangements with our concentrate buyers, which is allowing us to get better terms, which will ultimately lead to more profitability. In the coming months, we'll continue to focus on cost reductions and just overall improving efficiencies.
Okay, let me drill down on that a little bit, put it in maybe simpler English, hopefully. You know, a lot of what the mining industry does, you're kind of at the whim, let's say, of the smelters at times, and I won't mention companies, although I know a lot of them well, and they had really marginal returns based on the smelting contract that they couldn't wait to get out of. So that's what you're talking about, right? You want to improve the bottom line of the company by improving a contract relationship with processing. Is that
correct, but also with our contracts, to date we've been going month to month, so we haven't been seeing as favorable rates in terms. So Jasmine's actually been working quite diligently on getting us better terms, provided that we lock into longer terms. So now that we're starting to do that, we're seeing better terms.
great? And do you think that you're able to negotiate stronger now because the metals prices being down than you would be than if they were higher?
Probably a little bit. I think a lot of it has to do with where Avino's at right now. and making the transition from exploration to production.
We know there's big demand for the Avino concentrate once we get the 1,000-ton-a-day circuit up and running. It's copper rich. And there's a lot of copper trading firms out there that really want it. It's high-grade copper at depth in the mine.
David, do you want to go ahead and summarize the company as a whole?
Well, we're excited. We've just basically entered commercial production on San Gonzalo mine. We're bringing online Avino. That'll happen in 2014. We're reaching our milestones. We've been able to internally fund this expansion. We've kept the share structure intact. There's only 27.5 million shares out with no debt. Sprott Asset Management is the largest shareholder, and they're supportive of what we're doing, and they have great expectations from the outcome of what we're going to do in the next few years of being a sizable producer.
Thank you once again, gentlemen. Thank you.
Thank you.
Thank you.